This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Not upsetting the apple cart. Apple earnings better than expected for the most part, and the market responds after hours.
And Midwest flooding, rain and snow soaked the country's midsection, and the worst may be yet to come for businesses and farmers.
And Hollywood's new courtship, why the movie industry is seducing aging baby boomers. All that and more tonight on Nightly Business Report for Tuesday, April 23rd. Good evening, everyone. Tyler, what a day. A lot of drama, a lot of suspense. There's that big surprising sell-off on Wall Street, and then speculating all day for those Apple earnings after the market closed.
And yet, when all was said and done, the market's moving sharply to the upside, gaining for the third straight day, despite a mid-session sell-off on a fake tweet that spooked already jittery traders. But the big story right now is Apple's second quarter earnings, and the news was mostly good. Apple beat on the top and bottom lines on strong sales of the iPhone and the iPad tablet. It's increasing a stock buyback program by a staggering $50 billion, spending some of its cash hoard, and it's jacking up its dividend 15%. But Apple did lower its guidance for the current quarter, and that disappointed Wall Street just a touch. Seema Modi is at the NASDAQ with more now on Apple's results and where the stock is trading after hours. Seema?
Tyler, we're seeing the stock move higher after hours. As you pointed out, Apple beating street expectations. Its second quarter revenue coming in at $43.6 billion versus a street expectation of $42.31 billion. Now, its quarterly earnings also topped street consensus by 9 cents. Analysts were hoping for some clarity around its capital allocation strategy, and the street got that. Apple increasing its share repurchase authorization from $50 billion to $60 billion. Apple also increasing its quarterly dividend by 15% to $3.05 a share. CEO Tim Cook in the press release says, "We are very fortunate to be in a position to more than double the size of the capital return program we announced last year." Now, in terms of its iPhone and iPad sales, the company sold 37.4 million iPhones and 19.5 million iPads in this quarter, both of which came in higher than street expectations. Tim Cook, again in the press release, said, "Our teams are hard at work on some amazing new hardware, software, and services, and we are very excited about the products in our pipeline." Some good news there, Tyler and Susie.
Seema, thank you so much. Seema Modi reporting from the NASDAQ. Let's turn now to John Buckingham. He's been buying Apple shares recently for his clients. He's Chief Investment Officer at Al Frank Asset Management. So, John, is this what you expected in terms of earnings, the dividend, the stock buyback from Apple tonight?
Well, it was certainly a news-filled afternoon from Apple. The stock buyback was, frankly, more than we might have envisioned, so we're very appreciative of that. You know, Apple has a gigantic cash hoard, over $150 a share in cash, and we really are happy that they're putting that to work, especially when you can buy the stock here at these very inexpensive valuations. You know, we're trading now at less than 10 times earnings for one of America's greatest corporations. And yes, I know that earnings were a little disappointing in terms of the guidance here for the next quarter. But this is a fantastic company with tremendous products and a huge installed base of rabid customers. Yes, they're going through a little bit of a product lull here now as we wait for the next big thing. And of course, that's what's on everybody's mind as we go forward.
You've been taking some profits prior to recently. You've been buying the stock for some clients. If I didn't own the stock, based on today's numbers and based on your prospects for it, I'm not asking you to be a portfolio manager. I'm just saying, would you buy it at these prices?
Well, Tyler, I am a portfolio manager, And absolutely, I'd be a buyer of the stock at these prices. I know in the after hours it's had a little spike, and maybe it'll pull back a little bit as people might start to get a little concerned about that forward guidance. But absolutely, as part of a diversified portfolio, and I'm always about diversification. You know, we've owned Apple since 2003, and you're right, we did take some money off the table over a year ago in the $585 range. But when it came back down again, it just looked like a stock in our mind that was something we want to add to portfolios. Again, the multiples are really important to us. You know, single-digit PE, fantastic balance sheet, great products. You know, I mean, this is amazing. The company earned $10 billion in the quarter.
You know, John, but a lot of future growth and revenues and earnings are going to depend on what's the next new thing, as you just mentioned a while ago, and everybody's waiting for Apple's next big hit. Some people are talking about an Apple TV. Will this possibly be the game changer and the next must-have consumer gadget that'll make a big difference for Apple? What do you think?
Well, I think it would certainly be a product people would want to buy. The problem, though, is can Apple make it at a reasonable level of margins? You know, you're not selling a $300 phone or $400 phone subsidized by a phone company. You know, you're selling a gigantic television set, which costs a lot of money as far as the components go. And so that would be the real challenge, is can you maintain those margins? You know, we're complaining about margins dropping, what, to 36, 37% in the next quarter. I just don't think they can maintain that with a television. So we're going to give them the benefit of the doubt. This has been a company that's been innovative for year after year after year. I don't know what that next big thing is going to be, but I feel really well protected with the strength of the balance sheet and the inexpensive valuation to be a buyer of the stock at these levels.
You know, John, there had been some rumblings about Tim Cook, the CEO of that company. You said any rumblings that he might be in jeopardy were, if I might quote you, a bunch of hooey. I guess that's a technical term. Does this lay any of those concerns to rest, if they needed to be laid to rest?
Well, I think it does. You know, the folks who were agitating for change at Apple were really concerned about how they were going to spend that cash hoard. So the David Einhorns of the world, I would imagine, are happy today, given the gigantic increase in the buyback. And Tim Cook, you can't forget, he's been there a long time. It's not like, you know, he just came, you know, a year ago and presided over a stock slump, you know, from 600 to 400. He's been part of the history of Apple and has been really a very innovative guy as well. And keeping the trains running on time is a big deal, and I think he does it very well.
All right, John, thank you so much. Apple is stock everybody loves to talk about, and we'll talk about it more tomorrow. John Buckingham, Chief Investment Officer at Al Frank Asset Management.
Well, as we mentioned earlier, Wall Street was rattled shortly after 1 o'clock Eastern Time by what turned out to be a phony tweet issued under the Associated Press's Twitter handle. It reported explosions at the White House that injured President Obama. By the time it was determined that hackers sent out that bogus bulletin, the Dow, in a frenzy of electronic trading, tumbled 143 points in a matter of minutes. And just as quickly, the index snapped back to within a few points of where it was. You can see the almost second-by-second trading action in this Dow chart. The S&P 500, the NASDAQ, and Treasury futures all had similar reactions. Now comes the investigation. How was AP's Twitter feed compromised? Who did it? Was it someone trying to short the market for a quick gain, or just a hacker trying to unnerve a nation already on edge after the Boston bombings? A pro-Assad Syrian group claimed responsibility, but that claim has not been verified. Now, while officials try to figure out what happened, traders breathed a sigh of relief as the markets rebounded to notch a third straight day of gains. Helped by a boost in new home sales and in March and a strong round of earnings before the bell, stocks chalked up another winning session. In the end, the Dow shot up 152 points, the NASDAQ up 35, the S&P added 16.
More headaches today for people traveling by air. At airports from coast to coast, more flights were delayed because of furloughed air traffic controllers due to the budget sequester. Members of Congress today urged the White House to postpone those furloughs to speed up air travel and find other ways to save money.
Those long lines mean more Americans are flying, and that means good news for some of the nation's biggest airlines. With two major carriers reporting their latest quarterly results today, Phil LeBeau tells us what's driving profits at the airlines and the challenges they're facing in the months ahead.
The combination of packed planes and higher revenue drove two of the country's largest airlines to post a rare profit in the first quarter. Let's start first with Delta Airlines. Excluding charges, it earned 10 cents a share on revenue of $8.5 billion. By the way, this is the first profitable first quarter in over a decade for Delta. Meanwhile, U.S. Airways also beat the street, earning 31 cents a share on revenue of just under $3.4 billion. Now, with both airlines, the combination of tighter capacity and higher load factors meant their planes were fuller in the first quarter, and a pullback in jet fuel prices also helped the bottom line. But on the earnings calls, executives for the airlines expressed concern about delays due to the FAA furloughs impacting their business in the second and third quarters. They're not alone. With more than 1,200 flights delayed on Monday and more delays expected, some on Wall Street are worried the sequester could force potential airline customers not to fly.
People get to vote their vacation dollars however they want. And if they see that it's a hassle to fly more than it's normally a hassle to fly, they may vote differently. And with lower gasoline prices, you may get people driving to their vacation rather than flying.
So far, advanced bookings have not been hurt by the sequester delays, but there is a genuine concern that the longer these delays last, and if they become worse, then at some point people who were planning to take a flight might instead decide not to take that trip. Phil LeBeau, Nightly Business Report, Chicago.
We're just 2 weeks into the first quarter earnings season, and you've probably noticed that many companies have been reporting earnings that are better than investors expected. But there are also weak forecasts for the rest of the year, like the one that we got from Apple tonight. With 20% of S&P 500 companies already out with their quarterly numbers, how is corporate America doing? Here's Bob Pisani with our earnings scorecard.
It was a good day for earnings. Most importantly, big multinational industrial companies like United Technologies, Ingersoll Rand, and Illinois Tool Works, and others affirmed their 2013 earnings guidance. That's important because these companies sell in many countries, and if there were significant signs of an ongoing global slowdown, they would have spotted it. Now, some have noted that second quarter earnings may be a little bit below expectations, but they expect to make up for it in the second half of the year. Now, we're about 1/4 of the way through earnings season so far. Here's the good news. Almost 70% of the companies reporting have beat earnings expectations. That's above the historical average. Now, the bad news, only 42% are beating on the top line on revenues, and that's way below the historic average of about 62% beating. This has been a problem for several quarters now. It means that companies are able to do well on earnings because they've become cost-cutting monsters, not because they are increasing their revenues. Of course, it's good for companies to become more cost-efficient, but the lack of revenues is adding to the employment problem. Companies are reluctant to hire more people when they're not able to sell anymore. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Here now to talk more about those first quarter earnings results and to look forward is Christine Short, Senior Manager at S&P Capital IQ. Christine, welcome. Good to have you with us.
Great. Thanks for having me.
I assume that Bob got it right there, that the disappointment, if there is a disappointment, is that revenues have not been growing the way profits have. It's easier to finagle good profits than it is to manipulate the top line, isn't it, Christine?
Sure. There's certainly a disparity here between what we've seen with earnings results and revenue results. As of this afternoon, with all of the companies that reported after the bell, we have 67% of S&P 500 companies beating on the bottom line. However, only 41% beating revenues. And just like you said, it's very easy through accounting measures to throw in a special item and create the illusion of having a higher profit than you actually do. However, you can't really manipulate that top line number. And that's what's been particularly concerning this season. It's kind of deja vu back to the second and third quarter of last year when we saw a similar trend emerging.
I think what's also interesting in this earnings season, we're seeing many more companies forecasting weaker growth going forward for the rest of this year versus positive outlook. So, what does that mean for earnings growth for the rest of 2013? At the end of the year, what is earnings growth going to look like?
That's correct. For the second quarter, 28 companies have provided guidance at this point. Of those, 21 have given negative guidance, only 4 positive and then 3 in line. So that gives us a negative to positive ratio of 5.3, and that's the highest negative to positive ratio we've seen in 15 years of data. So much higher than we saw in the last few quarters, and that's a bit disconcerting, of course, but not terribly surprising, because at the end of last year, companies did warn the first half of the year would be quite weak as in comparison to the second half of the year. So even today, with companies that reported, we are seeing brighter outlooks for the second half of the year, but they do warn Q2 is still going to be quite weak, more of the same from what we're seeing in the first quarter.
Christine, as you look sector by sector, who's hot and who's not, and can the hot stay hot, and will the cool stay cool?
Well, telecom is our leading sector right now, and with almost all of those companies reporting, they're up about 10%. Of course, we saw AT&T beating on the bottom line today, adding to the overall growth rate. Not much of a story there. There are only 8 companies within the sector, but they are doing well because of, heavyweights such as AT&T, Verizon, Sprint reporting tomorrow, and they're expected to do better this quarter than they did in the year-ago quarter. As far as other leaders, we have consumer discretionary and financials. After today's reports, are actually tied for second as far as leaders go, both expecting 7% growth. Within consumer discretionary, it's really the home builders and the retailers that are driving growth there. And then financials, which began the season expecting negative growth, negative 1% growth, they're actually up 7% after great reports from big banks such as Morgan Stanley, Goldman Sachs, Citigroup. So that's where the financials have certainly gained as companies have come out and report positively within that sector.
Looking behind those sector numbers and who's winning and who's not, what is that telling you about economic and business conditions? What are the themes?
Well, one of the sort of negative themes that we're seeing, and despite what Bob said, yes, we did see some good reports out of industrials companies today, but overall the industrials are expected to be slightly down year over year, as are the materials. And when you have 2 sectors that are proxies for global growth, as big as those 2 sectors are, it is sort of disconcerting and just continues what we already know, that there is still weakness in global growth. A lot of these companies still citing Europe and China as sort of growing pains, as areas that they're seeing weakness in the first quarter and continuing into the second quarter. So I would say those two sectors alone do paint a rather negative picture. But then it is nice to see consumer discretionary on the other end, because it does point to a healthy consumer, that consumers are still out there shopping.
Christine Short, thank you very much for being with us. Christine is Senior Manager at S&P Capital IQ.
And coming up on the program still, rain and snow hit the Midwest, and the worst may be yet to come for businesses and farmers in that region. But first, here's how the international markets closed today. Turning now to Market Focus, a parade of earnings after the market closed today. We start with Dow component AT&T. Profits per share were in line, and revenues were slightly below analyst estimates. Shares had been up less than 1% before the close and fell as much as 2% in after hours.
Amgen reported higher first-quarter profits on increased sales of its rheumatoid arthritis drug, but revenues were below estimates. Shares had been flat before the close and dropped as much as 5% in the after-hours trade, as you see on that chart.
But shares of Yum Brands surged in after-hours trading by more than 5%. The company said it expects a double-digit profit growth in 2014. Investors focused on that upbeat forecast instead of disappointing revenues that fell because of problems in China, tainted poultry, and now avian flu. Still, Yum said today it'll open at least 700 locations in China this year. Shares were down almost 2% ahead of the report at $64 a share.
And a bounce back for Coach. It reported a 6% gain in profits and increased its dividend. A turnaround in its footwear line got some of the credit after a poor holiday quarter. Shares were up on the results and an increase in the dividend, gaining almost 10%, as you see there today. MetLife boosted its dividend by almost half to 27.5 cents a share. That's the first raise in 6 years. And as a result, shares jumped almost 5.5%.
Days of powerful rainstorms have caused flooding to rivers big and small throughout the Midwest. And now all that surging water is threatening the northern plain states just as farmers prepare for the spring planting season. How will the region deal with the cost and devastation of flooding? And what could it mean to the nation's corn and wheat belt? Sharon Epperson has more.
The danger may be easing from surging rivers, but after days of drenching rain, the damage has been done.
This is the record-setter flood for the Peoria area in modern times. We're at 30 feet. Flood stage is 18 feet.
Steve Yeager, who runs the hard-hit Heart of Illinois Regional Port District, based in Peoria, hopes shipping traffic will get back to normal conditions if a drier weather forecast holds up over the next few days.
We're expecting probably in the next couple of days an easing of the situation. Water's going down, and the resumption of barge traffic for transportation purposes, for agriculture, for soybeans and fertilizers and the like, probably by about Wednesday going into Thursday.
Runaway barges and busted bridges have made it difficult to navigate these waters for the past week. Homes, businesses, and farms along the nation's busiest commercial shipping lane have been flooded. Now the focus shifts to the northern plains, where it still looks like winter. Snowpacks in some parts of North Dakota are running 20 to 40 inches deep. But if there's more wet weather, when it warms up and the snow begins to melt, there could be trouble. Near Fargo, North Dakota, the sandbags have been out for about a week. Part of the Red River flooded there 2 years ago, causing $100 million worth of damage. And there are fears it could be worse this time. When the snow melts, the runoff could take farmland topsoil with it, a problem that's grown worse as grasslands have been converted to farms since 2005. Farmers try to plant corn when the ground temperatures hit 50 degrees. So far this year, corn prices have fallen 11%, and wheat is down more than 12%, but that may change. One of the North Dakota farmers we spoke with called hopes of planting 500,000 new acres of corn this year a pipe dream. For Nightly Business Report, I'm Sharon Epperson.
It looks so far away for us here in New York, but all of that impacts us. Higher corn prices mean higher dairy and meat prices, and then we'll see it in restaurants and in the grocery stores. And
you see, we have flooding now. We had drought last summer, and so the farming business is a tough doggone business to be in. And
we live in an era of extremes, right?
Wish them the luck. Still ahead, folks, why Hollywood is falling in love with aging baby boomers. But first, a look at how commodities, treasuries, and currencies fared today.
Have you seen any good movies lately? Well, if you're a baby boomer, you might be heading to the local Cineplex more often. A new study from the Motion Picture Association of America shows more older Americans are going to the movies more often than any other age group. Now, as we told you yesterday, with younger people streaming more content through Netflix or watching films on their tablets and smartphones, Hollywood is now aiming right where the big money is, making movies geared toward the people who still like to watch them on the silver screen. Julia Borston has our story.
While summer action flicks may target teenage fanboys, what's old is new again in Hollywood. Studios are increasingly targeting the 50 and older crowd, with films like Lionsgate's R-rated romantic comedy, The Big Wedding, with 4 A-list baby boomer stars: Robert De Niro, Susan Sarandon, Diane Keaton, and Robin Williams.
I feel so used.
This weekend, Big Wedding is debuting against Mark Wahlberg and The Rock in Pain and Gain, which targets a younger demographic. Earlier this month, 42, the Jackie Robinson biopic featuring 70-year-old Harrison Ford, brought in nearly $30 million. In contrast, teen scream flick Scary Movie 5 grossed just about half of that in its debut.
You know, you're speaking about a generation that was raised on going to the movies, and they believe that, you know, that's how you see a movie, in a theater.
In contrast, teenagers and 20-somethings are more open to streaming a movie on Netflix or watching video on demand, which is why movie studios are increasingly focused on that older demographic. Based on last year's results, it's working. A slew of movies with adult appeal, like Silver Linings Playbook, Zero Dark 30, and Lincoln, made big money at the box office and drew critical acclaim.
Adults don't want to be talked down to when they go to the movies. They don't want to feel like they're teenagers again. They want intelligent, engaging films. In Hollywood, when Hollywood realizes that, that's when they make the real money.
And with The Great Gatsby from Warner Brothers opening wide next month, Hollywood could hit a grown-up gold mine. For Nightly Business Report, I'm Julia Borston in Los Angeles.
The big drop in gold prices last week sent a lot of savvy investors into the yellow metal as prices hit two-year lows. Well, now the U.S. Mint has been forced to suspend sales of its 1/10 ounce American Eagle gold bullion coins because they ran out of them. The Mint said gold coin sales are up 100% over the same period last year, and there are still plenty of 1 ounce, half ounce, and quarter ounce coins to meet demand. In other words, go bigger or go home, I suppose.
Or go to the movies and you don't need to spend that kind of money.
I think that's a really true thing. I saw a movie called Parental Guidance not long ago. It had Billy Crystal and Bette Midler in it. And it really was a baby boomer aimed story about the three generations trying to raise a family. Very interesting
We've got a lot of good movies coming out this summer.
And that'll do it for tonight's edition of Nightly Business Report. Thanks so much for watching.
And I'm Susie Garib. Have a great evening, everyone. Tyler and I will be back right here tomorrow.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
I'm Susie Garib with a Nightly Business Report news brief. Apple shares surged in after-hours trading thanks to better-than-expected earnings. Apple's announcement of a stock buyback and a dividend also put investors in the buying mood. On Wall Street, traders were rattled by what turned out to be a phony tweet from the Associated Press about explosions at the White House. The Dow fell 143 points before bouncing right back. In the end, the Dow rose 152 points, the Nasdaq up 35, the S&P added 16. More than 1,000 flights were delayed because of furloughed air traffic controllers, as some congressmen are urging the White House to end those budget cuts. And the U.S. Mint ran out of smaller gold coins after investors rushed in to buy them when gold prices tumbled. Be sure to tune into Nightly Business Report right here on your public television station.